Ladies and gentlemen, please welcome your moderator, managing partner of TPG Capital Asia, Timothy Dattels.
Thank you, and good morning. It's a very interesting panel today, but I don't know whoever suggested that Tony Fernandes get up at 8 a.m. for a panel, so we're delighted. But we have a terrific group of panelists today with a very wide-ranging level of experience throughout the region. The topic of forces shaping Asia is quite extensive, given that it covers 60% of all the growth in GDP in the world, the major percentage of the population, and about 100% of the dynamism globally. So it's a very complicated subject. And Asia as a construct is complicated because it includes Japan, third largest economy in the world that is shrinking in population and aging at a very accelerated rate, but is very, very wealthy. And we have our colleague Toki-san from Japan Post. Japan Post manages $1.7 trillion worth of assets. It's like the equivalent of apple pie in Japan. And Tony from Jollibee runs one of the fastest growing food businesses in Asia, and he's expanding laterally throughout the region. Jollibee is one of the most powerful consumer brands in the region. He's expanded in China, Vietnam, and throughout the region, so he's propagating his business. My great friend Dilhan on my left, who runs Temasek in the US, and Temasek, as an owner of the government-linked companies in Singapore, has become one of the most powerful investors globally and extremely active in North America, and just an amazing investment organization with a very powerful team in the US led by Dilhan. And my favorite entrepreneur, Tony Fernandes from AirAsia. Funny story, TPG has been an investor in the airline business globally, and David Bonderman, my partner, is chairman of Ryanair, and the first deal we ever did was Continental Airlines, and we looked at AirAsia when Tony started the business, and David's fond of saying that, I don't know, this guy from the music industry, I don't think it's going to work, and boy, were we wrong. So he built one of the most powerful airlines in the world. I think the largest low-cost carrier in the world, or?
Yeah, at the moment.
How many?
We have 220 planes.
220 planes, and yearly loads?
64 million passengers a year.
Not so bad. Started in Kuala Lumpur, and Ronnie Chan, who is a true globalist and a real connector between North America and Asia and Europe, has an extraordinary property business and a wide variety of businesses, very much focused on North Asia, but through his family office has been a very, very active investor globally in biotechnology, and has been a tremendous investor for a very long period of time. And he, more than anybody else, has bridged between Asia and the US of any thinker I've known. So I'm going to ask Ronnie to kick this off and frame a little bit what's going on in this sort of geopolitical and Asian dynamic as well, because it's rapidly changing.
Me?
Please.
Oh, okay. Well, first of all, I think most people would agree with me that Asia is really a source of growth. Europe is not growing. The rest, the Africa and South America always have potentials, and the potential has never gone away, but let it forever remain. What's the use when there's potential when it doesn't get realized, right? North America will be fine, but there may be a little bit of a tendency to retreat, but that's no big deal. I always remind people that America was not a nation founded on internationalization. It is a country founded in isolationism. For its 250, 60 years of history, 2/3 of the time, they are isolationists. The fact that during your lifetime and mine, they are open to the international system doesn't mean that they were always so. So if they were to retreat a little bit, what's the big deal? What's new? Perhaps that it's just gone back to American orthodoxy. But the business community in America would not forsake the rest of the world as a market. So I don't see that that is going to be that serious. But nonetheless, I think when we survey the whole world, Asia is surely going to be a source of growth. However, there's another thing that people don't talk about. I believe that Asia is going to be a source of stability. As long as China doesn't do one stupid thing, as long as China doesn't open its capital market to the rest of the world. I know that this is totally unacceptable. This is not orthodoxy as far as the West is concerned. But just remember one thing. Since the Big Bang of 1986, roughly, the Western world opened the capital market altogether. Freer is better, bigger is better, faster is better. What results? Asia financial crisis? Okay, we have our own in-house problems. But then 10 years later, the West, which accused us 10 years previously, saying that we are no good, our infrastructure, our public institutions, are no, which is true in some cases, except Singapore and Hong Kong, I suppose, and Japan. The West got themselves into serious trouble. So as long as China doesn't listen to the West and don't open the capital account, openness is not all or none. Western civilization, everything is all or none. Asian civilization is all shades of gray. And as long as China doesn't do that, China will be a source of stability. One or two other points, and that's it. And another one is, a lot of people talk about the trade, worries about the trade. Well, they're talking about good trading, but not so much the service. Okay, fine, we know that. But a lot of people point to the fact that international trade across the Pacific has been really shrinking. And indeed, international trade anywhere in the world has been shrinking. I said, wait a second, look a little bit more carefully. Total trade is not shrinking. It's just being domesticated. It did not start with Donald Trump. Don't blame every problem on Donald Trump. Obama started a lot of those things. 4 or 5 years ago, my friends who are in manufacturing in my part of the world were forced by Walmart. You think Walmart cares where they do it? If not because of some greater power behind that makes them do that? Buy America? And so those guys have been forcing my friends to relocate the factory in America, in Kentucky, in southern North Carolina, in Atlanta, anyway. I mean, Georgia and that whole area. So it is just the domesticating of international trade. On the part of Asia, in particular China, on the other hand, all those Pearl River Delta, Yangtze River Delta, that used to service the greatest supply chain in the world probably has ever known. In the past, it just serviced Europe, serviced America. Now, in particular, the part that services America, and last night we had dinner with Wilbur Ross, and he was saying exactly the same thing. They're forcing them to go back. I thought to myself, it started a long time ago. So what is there to replace it? What does all that supply chain do? They are now selling domestically. China is growing in consumer spending. And so, again, you see domesticating of previous international trade. So I think that, I think China is pretty comfortable about the trade situation. I know the facts, 30-some% of China's economy is still relying on trade, and U.S. is still the second largest. But what can China do, except to face it in a very, very simple way? One of the slides that you provided, Tim, talks about the tariff into China.
Slide 4.
Tariffs
That's slide 4, if you want to put it.
It's really very low. China has plenty of room for negotiation. And China is very, very pragmatic about it. As I spoke in Mexico 4 days after the election of Donald Trump, in a session that talked about the world in the new administration. Everybody thought that it was going to be Hillary. Then Donald Trump came in. And then I said, wait a second, you guys in Mexico and we in Asia have a different situation. We in Asia worry about one thing, trade, which is a very rational issue. You guys worry about two things. You have trade and you have immigration, which is highly emotional. And so, hey, keep your heads down. Don't let the emotion get into the way of your trade negotiation. And China will be very cool-headed about it, and it'll be no big deal. It may go down a little in terms of trade across the Pacific with China, but a lot of that is really due to the domestication that I mentioned. One last point, and that is, what are the forces that shapes Asia? The Belt and Road that nobody talks about. what's the big deal? 2,000 years ago, there was a Belt and Road. I am restoring cultural relics in Kerala, India, where Chinese cultural relics in abundance in sunken ships. And so the trade along the Silk Road for the last 2,000 years, if not longer, has been really rife. And so it is just going back to orthodoxy of international trade across the big continent. The old world is going to increase, and everything in between China on the east side and Western Europe on the west. That's the part of the world that trade is not. They're not in the international system, and that's the part that whether it is started by China, let's not get emotional or personal about it. Doesn't matter. It's going to increase, and there will be plenty of opportunity. So I better stop there, Tim.
And let me just put a few snapshots on some of Ronnie's thoughts. Just flip on to slide 3, please. There's a lot of discussion around NAFTA yesterday. Can you put 3 on the screen? And as you can see, look at and this is U.S. good trade deficits. So you look at Canada and Mexico, the 2 balancers on NAFTA, relative to the trade deficits in China, which are continue to run at 200, 300, 400. That's where the issues will lie with this administration if you look at the numbers. But I don't expect that's going to reverse anytime soon. And if you go to slide number 2 on the screen, the countries like China that have high percentage of trade to GDP, or the countries like Korea, Taiwan that also have high intra-regional trade, are probably a little more vulnerable as well. So it's not just about China because of production chaining, and it's a very interesting observation to see how this is going to play out. And then I just want to go back to the raw growth numbers, slide 13, just briefly. And this is the point that I was making earlier, that this is the blue bar is China, and between China and India, we're talking about 2/3 of all the growth in GDP, coming from this region. So it is the growth engine of global GDP growth. If you get under the hood on that a bit, on slide 15, there's been a lot of discussion here, and this just looks at 3 of the main economies. And I chose China, India, and Indonesia for an important reason, that of the major population economies in Asia, they all have very, very strong, powerful leadership today running these countries. And the blue bar is the shift in GDP, the percentage growth in GDP driven by consumption versus investment. And the most interesting thing is everybody thinks about China as driven by capital investment in infrastructure, et cetera. The growth is coming from consumption. And that is true throughout Asia, particularly India, but also Indonesia. And so the connectivity is quite powerful. And I'll flip to slide 5 here. And this just shows a bit of a time shift. And it gets to Tony Fernandes and the other Tony business here. The blue bar is ASEAN trade to China, or by destination. And you can sort of see, if you go back 15 years ago, ASEAN trade to the US with the blue bar on the right-hand side is a very, very high percentage. And today it's about half in 15 years. And conversely, ASEAN trade to China growing massively. China and Hong Kong growing massively, to India growing massively. And that is due to tourism, it's due to production chaining, and it's due to a lot of the lower-end outsourcing of jobs out of China into ASEAN. So the connectivity in the region is extremely powerful. And Tony, you've been at the heart of that consumption and connectivity, and maybe just share some of your experiences and thoughts from the ground up.
Sure, thanks. It's always hard to follow Ronnie because he's super smart, and I never understand what he says.
There's another way of saying that bullshit.
But I'll try and put it into my perspective. Where was I? Yeah. Basically, I'm a big believer in Asia and ASEAN, whatever all the smart people around the world say, and even on the geopolitics, etc., because of the economy, because of economic growth, because of consumption, because of the relation between each other's economies now. And I think in some ways, if you look at ASEAN, the development of intertrade flows and tourism is beginning to show that it can actually stand on its own 2 feet, if trade wars, etc., happen. So if you take my own experience, I started in Malaysia, and over the last 15 years, we've gone from 2 planes to 220 planes, from 200,000 passengers to this year we will carry 63 million, as I mentioned earlier. And of that growth, 60% are routes that were never connected before. And I think that shows the power of Asian consumption that is growing very, very rapidly and making Asia a smaller place. I mean, we're going to third-tier cities in India and China, connecting them directly to ASEAN. And when they talk about a third-tier city, it's like still almost half the size of Malaysia. So I'm a big believer in that. And I think I've been through every crisis known to mankind: bird flu, SARS, protection, high oil, credit crisis, but we've always grown. And I think I've always been positive because of the power of the consumer. And that chart that Tim just put up actually exemplifies that. And I'll give you a funny example of how strong that is. During SARS, no one wanted to fly. Everyone thought you would die if you went on a plane. And I told my team, who were like, this is the end of AirAsia, I said, triple your advertising. Because every airline had cut advertising because they were, too afraid to advertise. No one was flying. And my team looked at me like, are you mad? I said, look, I trust the Asian consumer. And I trust Malaysians. If you put a fare low enough, they will risk their lives. Okay? At 800 ringgit to Kota Kinabalu, I'm going to die. At 80 ringgit, who cares? And so Asia has always ridden through these crises, and have always ridden through these crises through consumption. And I think that is a big, big plus of where we're heading. The little cautionary note I'll say is infrastructure. Obviously, I think I could grow much quicker if airports in Philippines and Malaysia and Thailand were a little bit ahead of the curve. I think in China, actually, they're probably, even though they're so ahead of the curve, even in certain places in China, the traffic is slowing down because they don't have enough capacity. Japan, I mentioned to the Deputy Prime Minister yesterday that you can talk about tourism, but someone's got to come and land in Tokyo at some point. So that is something that Asia has to get a little bit quicker at doing, is because we're so successful, we're becoming a victim of our own success. So while I know there's a lot of talk on geopolitics and trade, etc., I'm very bullish on Asia because of the consumption. And we're a living example of what can be created in 15 years in a very political industry. The fact that we've been able to grow, we had to compete with Singapore Airlines and Malaysian and all the national carriers.
What are your landings in Singapore now relative to Singapore Airlines?
We're now the second largest. It took me 7 years to get Kuala Lumpur, Singapore as a route. They blocked us all that time.
So you could drive, I guess,
Figured we could drive. But so bullish, and I think I did understand a lot of what Ronnie says, and I echo it. In that I think trade is even though he's wearing Harvard cufflinks, trade is heading in the right direction.
So Tony, I'll come to you with the.
I feel very naked here because everyone's got notes and slides, and I'm in jeans.
Okay.
But
All right. And I'll come to Tony with the same question, but what are the challenges on building a multi-regional business? You don't have the huge domestic market, so you have to propagate your business, as does Tony, although he has a much larger domestic
I think it's
framework.
tougher for us in ASEAN to build. It's easy for an American company to come in and build a common brand across the businesses. One of the tougher things is, say in ASEAN, different standards. Regulation. Yeah. I've been pushing within ASEAN to have common standards, more MRAs, harmonization. Yeah. So you have 10 markets. And culture and local rivalry between each other. But as long as you're strong about it, you find a way. I'll tell another little last funny story. We went to Thailand.
It's on the record, just so you know.
It's okay. Yeah. I always get myself in trouble. When we went to Thailand, the pilots refused to go in the bus with the cabin crew. They said it was beneath them. and that means we needed 2 buses. In Malaysia, it's the other way around. If the cabin crew aren't there, the pilots won't go. And I won't tell you what the Indonesians want. So how did we solve that? We shipped up a bunch of Malaysian pilots to Thailand to show them the benefits of going in the same bus together. And net, we had 15 Thai Malaysian marriages. So we were integrating ASEAN in more ways than one. So if you put your mind to it, you can build a regional brand. I'll stop there now.
Tony, his company Jollibee had its roots in Los Angeles because I asked him about the brand Jollibee, which is a very happy bee, a very happy, busy bee. And he said, well, I always loved Disney characters, so that's how we came up with the logo. But for those of you who don't know Jollibee, it's a, I don't want to use the word McDonald's of Asia because it's much different type of business. Very powerful brand in the Philippines. It's expanded globally now and very active moving that business to Vietnam and China. And I just hope you don't corrupt the diets, the traditional diets of Asia too much. But anyway, maybe just share the opportunity and how you've propagated your business and got into that deep consumption route.
I'm probably more lucky that we are in simple business, not that complicated. It's not a rocket science. It's more just to make sure that your consumers are happy with good food and good value. That's it. And as mentioned earlier about the GDP growth in Asia, and again, we were lucky, we were in the right region. And for example, like you shown the chart 15 earlier, if you look at Philippines is not in the chart, but if you look at the Philippines for the last probably 5-6 years, we've been growing consistently at maybe above 6%. Yeah. And it's one of the darling place for investment during this time. So and then also the population is really young, probably 70% below 30 or below 25. So it's a very young population. Demand is, the way I look at our industry, demand is really unlimited. So it's not, I always tell our people, it's not about external competition, it's more about internal capability. How good are you to meet the demands of the external world? And when we look across, there are lots of food business or restaurants, but it's still hard to find really good food with a good value. Very few of them. So if we can tap into that, especially in Asia, it's really unlimited. So talking of what will be our challenges going forward, it's really talent and human resources more than anything else in our industry.
Thank you. Dilhan, you have an interesting job running Temasek in the U.S., and you have deep perspective on Singapore and Asia, where Temasek's been such an active investor. Maybe just share with us how you look at the world today in terms of investments, and then narrow in on Asia in terms of how you see the landscape with the amount of capital you have to put to work at high returns.
Mm-hmm. So thanks, Tim. But maybe I'll just add to Tony's comments about consumption in Southeast Asia. I think we're just beginning to see a very significant wave, to be honest. And what we've seen over the last 15 years, emergence of new models, you can call it disruptive models like low-cost carriers in Asia and so on. And it's very significant. I'm on the board of Changi Airport. Changi Airport has the second largest number of transfer passengers that come through.
That's the airport in Singapore.
Yeah, it's the airport in Singapore. And we have 3 terminals there with a capacity of 66 million passengers, and we're already at 60 million, growing at 5.8% CAGR compared to world GDP growth. Okay, a lot of that traffic is driven by low-cost carriers. Okay, like AirAsia, for example, and Lion Air in Indonesia, and we have our own under Temasek as well. And that is a significant growth of consumption. People traveling, people spending, and a lot of travel is actually intra-Asia travel, intra-ASEAN travel. two of the thickest routes are Singapore, Malaysia, and Singapore, Jakarta, for example. And we're trying to get more landing slots in Jakarta, and if the infrastructure gets better, then there'll be more aircraft flying to Jakarta and from Jakarta outwards. And so that will be a plus for more traffic within the region. And just following one of the slides, you can see that the intra-ASEAN trade numbers are just increasing significantly. And the ASEAN Economic Community comes about, there are even more. And that will just increase the connectivity between the ASEAN, 10 ASEAN countries. And in particular, I would say the ASEAN 5 stand to benefit quite significantly. You know, if you think about Malaysia, Thailand, Indonesia, Vietnam, Singapore, ASEAN 6, and Philippines. These 6 countries, which account for the bulk of ASEAN's GDP, gives a lot of, I think, plus points for us to think about. And the collective GDP of ASEAN is about 2.5, 2.6 trillion US, which is larger than the GDP of India at 2.2. And your per capita income is only at 4,000 US, rapidly increasing because you now are seeing new business models, particularly e-commerce. The mobile phone penetration rates are going up at the fastest of anything in the world at 14% CAGR over the last 5 years. You're going to see a lot more consumption coming in. And so more trade within ASEAN is going to be, I think, something to watch out for. More connectivity between people in ASEAN is something to watch out for. And I think that if you sit where we are in Singapore, Indonesia, Vietnam, Philippines are 3 countries which are rapidly growing. Incredible opportunities there because they're leapfrogging traditional business models into the internet age, and there's humongous opportunities. When you have startups that can raise $1 billion today for what was historically seen to be a very tricky economy, I mean, that's something that you've never seen before and in ASEAN. And these new business models will be the drivers of the future. But coming back to where we sit right now, so just to give you a perspective, up to 2002, about 80% of Temasek's portfolio was exposed to Singapore primarily. Today, Singapore is only about 27%. China is 25%. Okay, the US is about 10%. This is as of 31st March 2016, which was our previous financial year.
Total assets?
Exposure of assets to where we are and to our total portfolio as a whole. And Europe is about 8%, Australia is about 6%, and the rest of the emerging markets are roughly about 2%. But we think that the world going forward needs a balance between developed markets and emerging markets. So we've been putting more capital to work in the US. We opened up in New York in 2014, June. We have 30 investment professionals now in New York. We opened up in San Francisco last September. And now we have 7 people there. We opened up in London in June of 2014 as well. We've got 38 professionals there, but we have 60 investment professionals in China. Between Beijing and Shanghai.
So let me just put a slide up, and I'll ask you the question, and Toki-san, which is it was something that I find very confusing. Slide 10, please. And if you could put it on the screen as well, I'd appreciate it. So this is since the mid-90s. So right at the time of the Hong Kong handover, right before the Asian financial crisis, and right when China was starting to boom. And the lower line that's grown since the mid-90s to today, 1.2x, is the MSCI Asia Pacific. Now that's the Pan-Asian Index for equities. It's not a perfect index because it doesn't have enough China, it has too much Japan, but that is the Pan-Asian Investment Equity Index. So all that growth in Asia, all that consumption growth, China growing from $1 trillion to over 11 trillion, and that's what you got if you invested $1 in the mid-90s, you have 1.2 times today. The top line is the S&P. So in that same time period, you would have made 5.2 times your equity dollar. Now, this is either anomalistic, or there's something going on with numbers, or this is the best time you'll ever see as a dollar investor, and this is dollar returns, to reverse that trade and be thinking very carefully about what the next 20 years is going to look like in terms of returns. But it's a very complicated question, and maybe Dilhan, I'll ask you to start, and then Toki-san, I'll come to you next.
So I think that doesn't tell the whole story.
True.
Okay, for sure. All right, you look at China today, okay, it's a $12 trillion economy. It's about 6.6 trillion is consumer-oriented. Okay, 6.6 trillion. And it's growing rapidly. on the consumer side. Manufacturing actually is coming down as a proportion of GDP growth as compared to services and the consumer. And I think if you just look at the innovation that's come up in China as well, that story doesn't tell that. You know,
True.
$31 billion went into venture capital last year in China, deployed more than in the US. China today is 46 unicorns. US has about 100, but China is increasing much faster. All right? If you think about that, you know, 31 billion in 2016, 26 billion in 2015, 12 billion in 2014. That's what China represents for the future. India, by the way, the numbers are not so good. You know, it was at 5 billion in 2014, 8 billion in 2015, and it's down to 3.3 last year, largely because it's a very different game if you're playing in India versus China. That means India's getting 1/10 amount of venture capital compared to China. You know, but India's growing faster than China. It's growing at 7.1%. You know, and it's got demographics in its favor. So if you think about the long term, that's an interesting thing. And again, I think, Tim, your index doesn't have the rapidly growing Indian companies as well as a significant proportion of that index as well. So if you were to invest in China, in the Chinese market, in the Indian market, during this period of time, you'd do much better than 1.2x.
If you could pick and choose, you would.
If you could pick and choose.
Now, Toki-san has a very interesting exercise. For those of you who know Japan Post, you'll be well aware of this. This is $1.7 trillion to invest. They have as many accounts at Japan Post as there are population in Japan, I think, roughly. So this is an enormous exercise. And, you know, it's complicated because debt to GDP in Japan is quite high, and it's in the common press that how that's going to be addressed. But the assets are enormous in the country. And Japan was clearly very wealthy before they became old. And this exercise of taking that capital base, which is every citizen of Japan, and investing it, and it's been largely yen denominated, into thinking about how to deploy that capital against, you know, this very important pension system as well is interesting. But maybe you can sort of, Toki-san, frame the exercise you're going through, and also maybe talk a bit about the changes in Japan, the demographic challenges, because you're a bit of a laboratory for the rest of Asia, because, you know, countries like China, no country will age in history as fast as China because of one-child policy. And Japan is the oldest society in history in terms of average age today. So it's a fascinating exercise.
Yes. Yeah, first of all, we Japan have over the $10 trillion money, yeah, in cash in bank deposit. Yeah, it's a huge number of money, yeah, stored as a bank deposit. Yeah, why? I think after the World War II, yeah, Japanese economy is growing up and catching up the advanced countries. Yeah, but all of the money, all of the people's money, Japanese people money was held as Japan as a deposit of the banks, and the banks provide a loan to all of the enterprise in Japan, and that's all. No investment is made by the people. And as for the enterprise side, there's so sticky practice. It's composed of 3 factors. One is seniority systems, and second is lifetime employment. And the third is inside the labor union practice. And these 2 parts very sticky, form some kind of balance point in terms of game theory or something. And that means for many years, Japan's money flow is debt-oriented money flow we have. But from the, that money flow works well during the population is increasing and also catching up the advanced country, because there are no advanced technology to catch up the advanced country. But after the 90 years, the population shrinking, and also long deflation is keeping for a while, and that kind of money flow doesn't work well. And after Abenomics, I think Abenomics, the very important measure is to fix that kind of money flow to the equity-wise money flow, to implementing the two measures. One is the corporate governance code, and second is it's including us, Japanese big institutional investors, shaking up the investment strategy from the debt, from the bond-oriented investment to the equity-like oriented investment. And that kind of measure reverse conventional money flow, debt-oriented money flow, reverse, and create a very decent equity-wise investment chain. And that is a very important measures. And also we Japan Post Bank can transform our very conservative investment strategy to the more global, more equity-wise ones. And that kind of a measure, I think is a very good benefit for Japanese economy itself.
I want to talk a little more about China, Ronnie, and I'll come to you in a second, and then we'll shift to technology a bit, Dilhan and Tony. So on slide 18, if I can just put 18 up for a moment on the screen, because there's been a lot of discussion about middle class and the emerging consumer. To me, the most interesting story in Asia is technology, which we'll talk about in a minute, but also the wealthy. And the blue stack on the top, that fastest growing segment is very wealthy Chinese consumers. And I sit on the board of Shangri-La Hotels, and we always analyze tourist movement. Just a couple of interesting facts around the super wealthy in China. In Hong Kong, the Chinese tourists are not only the #1 tourist, they're also per capita the largest spender, per capita, per individual. In Australia, I think Chinese tourist destinations, arrivals in Australia were about between 8 and 9 million last year. That's a country that has a population of 24 million, so 1/3 of the population arriving from China as tourists. And Ronnie's business, as a developer, has some of the highest end real estate projects in China, and he's been very much tapping into that segment of the market. And maybe, Ronnie, you can just talk a little bit about what your experience is as somebody that's tapping into that thread, but also corollary, and we'll go into technology. Is technology going to eviscerate it because online businesses in China are a much higher percentage than they are in the U.S. today?
Well, I don't think that it takes a genius to figure out that one of the biggest opportunities for anybody, anywhere in the world, is China's consumer market. You have 1.37 billion people now with a per capita GDP of something about 8,000 plus, and growing fast. I know they talk about the middle income trap. I never believe it. Why should something that happened in South America 20 years ago should be applicable to China today? And the technological element that is being employed in the Chinese economy is rising very fast. Indeed, the marriage between consumption and the use of technology is today perhaps as advanced in China, if not more, than in the United States. In the United States, I have friends such as Simon Properties, or in Australia, Westfield, which is everywhere. They have to devise their own technology. Much of what they devise, I can buy. Being in China, I can buy them existing from the market because there are already people writing softwares of all kinds of things. And so I think the story of consumption in China is a compelling one. Anybody who misses it is either blind or is unwilling to take the risk.
Not everybody makes money, though.
Of course, well, in everything, though. Hey, airline, you got to be a fool to be in the airline business.
I told you I wasn't as smart as him.
But Tony managed to make it work. You know, Peter
He gets to go on the bus. You know, you don't.
former chairman of Cathay Pacific told me, he said, Ronnie, don't get in the airline business. I said, sure, of course I won't do it. Well, I'm not that stupid. But why? Why? He said, it is technology intensive, capital intensive, labor intensive, regulatory intensive. Whoa, if you can make it work, you're the smartest guy. Ladies and gentlemen, you're looking at the smartest guy right here. And so, forget, you know, there are always trouble economies, trouble industries, and even within industries, you always have smart guys like Tony that can make it work. And so I think that, but I'm speaking in general terms. If you have intelligence like mine, which is very, very average, then you want to pick a fight that you can win. And China consumption is a fight that most people can win.
And the real estate bubble that was supposedly going to pop never popped in China.
Well, first of all, the real estate bubble, so-called bubble. The West. Oh, by the way, I always tell people that I don't have a recipe to make money. Obviously, I don't. But I have a recipe to lose money.
Read The Economist. You lose.
Read, not just Economist, read the Western press about China and do accordingly. Yeah. Most likely you'll lose money. They have improved. In the old days, they didn't even get the facts right. Now they get the facts right. But the interpretation of it, it is so, looking at China with a Western perspective. And no wonder you don't get the right conclusion. And you keep harp on the same point, such as real estate bubble, real estate bubble. Right now, they're harping on the debt, the total debt in the system. I just remind people, I said, in the last 30, 40 years, China has faced that same problem, having a serious debt problem. 3 times, perhaps? You've been around, Tim.
Yeah.
And in the old days, even without the money that they do have today, they resolve it. And the reason is because they have a lot of tools in the toolbox that you and I have never seen before. Yeah.
And the
it's
tools
called administrative measures.
And the tools are sharp because of the way the capital system works, and savings rates and bank deposits are very high. Just on the tech piece, and I want to go back to slide 17, just highlights Ronnie's comment, if you could put it on the screen, please. And the number on the left-hand side is number of internet users and mobile penetration over 700 million. So you already have 2+ US populations using mobile technology in China. And then if you look at slide 19, and this just takes India, slide 19, if you can put it up. India's 7-8 years behind China. So if you think of the other markets, as China starts to slow in terms of rate of growth of technology and internet penetration, all that happened in China is going to happen elsewhere in Asia as well. So Dilhan, I want to go back to your comment and then go to Tony on it as well.
So I think
what's exciting? What do you like at the ground level? What's exciting?
I always focus on what's worrying me, actually. And what's worrying me is elevated valuations, but never mind, that's a different thing.
Join the club.
But you guys are elevating the valuations. But if I come back to that number, e-commerce penetration is roughly about 400 million today, people. And 75% of that is actually linked to the mobile phone. But that's rapidly increasing. The demonetization that Prime Minister Modi put in place at the end of last year, while it had immediate...
You might just to pause there, because not everybody will be spooled up on that. Yeah. He took 80% of the currency out overnight. The night of the Trump election, actually, which is brilliantly timed. 80% of the currency the next morning, invalid.
That's right. And what it required is for you to take out the cash that you had and kept under your mattress or kept in your shoeboxes or whatever and go to a bank and exchange it for new notes. So that way, they captured a lot more money into the system. There are many plus benefits that he can get from it. Number one, taxation. Number two is to actually reduce the amount of black money out there, which goes towards funding elections. But number three is that's going to lead to digitalization in India. It's happening already. People are opening up mobile banking accounts. Paytm, which is the leading digital payment system in India, has seen an influx of account openings. SoftBank just put a big chunk of money into it just a few days ago. And that's the story of India. India's story is that of digitization as the population comes into a more formal economy, from a rural base into a more formal economy. And I think that's going to be an interesting story that's going to come about in some time. But let's be frank, India's way behind China. I just gave you the numbers, right? India's venture capital was 3.3 billion, China's 31 billion. That's 10 to 1 or 9 to 1. Okay, and that's a phenomenal gap. I think the second thing about it is that infrastructure in India is woefully behind China. China had the benefit of the government putting a lot of investment into infrastructure for over a decade. India needs to get capital to do the same. And the capital it needs to get is capital from outside, FDI. And India needs to figure out how it brings its rules and regulations into one which is predictable for that foreign capital to come in, for the infrastructure to be built out. But there's a huge opportunity there if you can get into it. But the other thing about India, of course, is that you've got some very powerful businesses and companies there that actually can have choke points for you, compared to China, where it's much more open and privately owned enterprises really do have an opportunity to grow significantly. But the same story comes about in Southeast Asia. Today, we have 260 million people who are connected to the internet. That's rapidly growing, right? In the past, 14% CAGR, it's going to go on to about 480 million people, we think, by 2020, 2025. We think this is, between Google and Temasek, we did a study of this, which we published last April, and we predict that the internet and e-commerce markets as a whole in ASEAN will be about 200 billion US plus by 2025. And that's a phenomenal number if you think about where it is. And a lot of it is B2C, e-commerce, where we think there's a 32% CAGR going up to 88 billion US by 2025. Those are big numbers. And so, when you see things like the ride-sharing companies being able to raise $1.5 billion for the next round. Who are coming in? People like KKR, Warburg Pincus, who would normally be buyout guys in this market, are now putting growth equity in these models. Why are they doing that? Because you're seeing young populations, you're seeing their connectivity to the internet, you're seeing their willingness to go into the newer business models which are out there, and it's a real cash-generating machine. But the other thing that they're seeing is data. The data that comes through the payment system will be very, very critical to think of what other streams you can go into in terms of new business models which will come out. And that's the excitement about Southeast Asia for the time being. Still a young population. But by the way, I was just telling Tim that while we talk about Japan aging and we talk about China aging, I can tell you within Southeast Asia, most of us by 2050 will be aging population except for the Philippines, which has the brightest outlook in terms of the young population, demographics in terms of population growth and so on. I mean, that's what we're seeing in terms of data. So Ronnie, you don't agree? Bad news, yeah. So I mean, this is the far-off issue that we have to be concerned about. But that just means that we're looking at fewer workers, okay? Because the dependency ratio is going to change. So we have to radically change our economies in the next 25 years to cater for that in the next 50 years. So that's a huge opportunity on one side, but it's an issue for governments on the other, and for society as a whole.
I can argue, Tony, your business as much as an airline is a technology business and an infrastructure business, because those two things are really driving what you're doing.
I mean, we're in existence because of technology. And I said, for the first 15 years, we were focused on being a great marketing company, and now we're very focused on being a technology company. And 85% of our business is done on the internet. And already that's migrating to the mobile phone. We saw that opportunity earlier. If you look, 5% of our business is done on social media. We're already transacting on WeChat and Line and all those social media apps. So big believer in technology. I was going to add, and Dilhan mentioned it as well, the big potential of data. That's going to be, for us, we see ourselves as a huge data company because we have very valuable and very rich data. And we're going to be doing a lot of businesses from that data.
What have you learned from the data?
We've learned on people's spending patterns. We've learned on the methodology of buying, the transactional value, how many transactions a year. But more than anything, data is going to be able to be more productive in terms of reducing cost. It's going to be able to drive more sales as we target promotions and we target things much easier. So we see a huge opportunity from this technology. I think that's an upside. If you could, just one point to note, if you compare China with the rest of India being a unique example, but Southeast Asia, one thing that the governments of Southeast Asia have to work out is that harmonization point. You can ship products across. Why e-commerce has taken off in China, it's one system. You can ship products everywhere, it's one payment system. ASEAN still has to grapple that if I want to ship a product to Singapore or to Thailand, it goes through custom unions, there isn't good payment systems, etc. But that's going to come. The young entrepreneurs are building systems very rapidly, and the beauty of it is governments don't understand it, and hence there's no regulation.
So it won't be regulated.
Correct.
Will payments be regulated?
I don't think so. I think I have to say, even a central bank, I mean, we're working on an ASEAN payment system. The central bankers are really very positive on this and are looking for it because they want to break down some of the old expensive technologies. So I think one of the great advantages is there's no regulation, and I think the entrepreneurs and the regulators will build them. I'm sitting with central bankers who are probably the most boring people in the world, talking about how to make the regulations, and that's very, very exciting.
Yeah, and you know, the unbanked sector in ASEAN and actually throughout Asia is enormous. We've been fortunate enough to invest in an SME bank in Indonesia called BTPN, and SMEs that were quite healthy were borrowing the equivalent of payday loans. They're called the 5-6 market. They borrow $5 in the morning and they pay $6 back at night. And they're small businesses. They're very profitable businesses. And if you have structure around it, particularly using mobile technology to drive the costs down, you can deliver credit and business advice and services to deep in the markets, the regional markets. And I'm not talking Jakarta or KL. I'm talking
I think some of the biggest cities of growth are those smaller cities.
Yeah, Medan.
I think the great thing about mobile technology and going back is getting capital out there, right? Because getting credit out there was difficult. When you go into secondary, technology is going to change that, and I think the whole capital distribution and getting capital to entrepreneurs, getting capital to SMEs is going to change very rapidly due to data and due to technology, getting it out to them so the lenders have comfort, and even collection. Because if you think some of the collection methodologies is going door to door and house to house, that's going to change when you have payment system. So I think there's a whole lot of capital that's going to be released into the system, and a whole lot of entrepreneurs that are going to come out, and that's why I'm very excited about Asia going forward.
We invested in a group lender in India called Jana Lakshmi, and they sweep the cash every night. They only lend to women because the women, you know, run the show in India like most other countries.
I was going to say that. India's not special there.
They sweep the cash every night because they need to make sure that the cash isn't sitting around the house and getting used unproductively. So it's quite interesting, but you have to be able to drive the cost per transaction down deeply in technology.
It's volume, though.
Yeah. And Tony, and we didn't talk about Vietnam much, and it's kind of an interesting place that's had some strong growth recently. And
Yes.
how's your experience been in Vietnam?
Actually, we have to thank our former finance secretary here, Cesar Purisima. A few years ago, he told me, you better look at Vietnam with population, GDP is growing fast. And we started looking into it. And we're very happy with the results from Vietnam.
Do you use your brand in Vietnam, Jollibee?
We have a Jollibee brand there. We have about, I think, 85 stores now in Vietnam. And we did a joint venture with a local entrepreneur of doing a coffee chain called Highlands Coffee. And with a joint venture working together and assisting him in terms of technology and know-how, we are now enjoying double-digit growth, 180 stores now in Vietnam.
Do you control your business there?
Sort of, it's a joint venture. So although we now own 60% of it, we still let the entrepreneur do whatever he wants to do. We just guide him. Of course, in terms of taste pattern, there's a slight difference in terms of taste in Vietnam versus Philippines. But generally, if they find food really good, it's just worth.
Not as much lechon.
And talking of, for example, like you're showing the chart 18 where China has this growth in terms of super rich. Some other countries like Philippines, middle class is also growing fast. So you can start seeing higher end restaurants coming up in the last 2-3 years. And it also challenges us in terms of, boy, there's another new segment coming up. So this...
How many stores in the Philippines do you have, outlets?
We have about 2,600 stores among a few brands. So we are in the hamburger, in the Chinese fast food, in the pizza chain, in the cake chain. In terms of growth in the Philippines, we are still looking at a very high growth for the next few years. As mentioned earlier by Dilhan, that we have a sweet spot in terms of population age. And I think, as you said, probably the next 50 years, we still considered a young country.
And Toki-san, I don't want to keep putting you on the spot as an economics experiment, but I find Japan particularly fascinating in this regard because it's like no other time or no other place. So it's very hard to draw analogs. So maybe I'll put you on the spot a little bit on Abenomics and the possibility of reflation. I personally think the reflation trade is in China, but how do you see Abenomics playing out? Are your models showing inflation and growth rates coming back?
Yes, I think Abenomics, I mentioned above the Copernicus Code amendment is very important because the company hopes to improving the ROE from the pressure from the stockholder or something like that. And GPIF and also so many institutions increase their share to the allocation to the Japanese share and company's share, and they try to do that. And but the most crucial problem is population decreasing. And
so you're gonna, because the population's decreasing and Japan is not too interested in rapid immigration, you should become the world leader in robots because you need to have a lot of robots to take care of people and to work in the factories. Serious comment, actually. Yeah. There's a very interesting survey that came out that said that Japanese elderlies prefer to be companioned by a robot than a helper.
Okay. And
it's absolutely true.
Yes, yesterday, Vice Minister Abe told that the Japanese people are very acceptable for the robot. That's because the manga. Manga shows very several Doraemon, something like that.
Robots are superior to human.
Yes, that's right. Yeah, but I think the AI and robotics help the Japanese population decreasing. Because last year this conference focused on the AI things. And at that time, the AlphaGo defeats a professional of the professional, and everyone talk about the AI loved the people's jobs, but in the case of the Japan, population is decreasing, and it is no afraid to lobbying by the AI something. Yes.
Thank you. We have about 15 minutes left on the clock, and if people have questions, please raise your hand and grab a microphone. I can't exactly see who's asking a question, but if you do, just wave your hand, and we'd be happy to. A microphone up here on the left. Maybe just for the benefit of people, state your name and ask a brief question, and we're happy to answer a question. Can a microphone come up here, please? Unless you want to shout.
Hi, my name's Lev Mass with Exceed Capital. We're a multi-stage venture capital firm. And this is for Ronnie. As we've seen a lot of the sort of capital controls in China, how have you seen the investment landscape change in Hong Kong? I know the Kai-Tak bidding was kind of conscientious recently, so I'd love to hear your thoughts.
Who cares about Hong Kong? I'm serious. Because, it's we're important. We know our own importance. We're not, denigrating ourselves. But our future is to service mainland China, and so be it. In the last 60 years, we first served the United States, then we served EU, then we served Japan, then we served everybody else. And now we're serving mainland China, right? In terms of the regulation, the investment, and so forth, Hong Kong, there'll be no change. Hong Kong is basically the same, for the last 30, 40, 50 years. Mainland China, on the other hand, overall, the direction is in the right direction. But as we all know, nothing in human affairs goes in straight lines. So it undulates. And so the West are very good in one thing. Whenever it, comes down a little, they say, it's a reversal, as if mankind's events can be, a straight line, which is crazy. So I think that, overall China is still deregulating very much. The only thing that I hope they will not deregulate so fast, as I mentioned, is really the capital market opening. Apart from that, I think to do business is a lot easier today. I know some big corporations are complaining. And the reason is very simple. Because in the 80s, 90s, they were having such a hell of a good time if you were bold enough to go into the China market in those days. China bends backwards to make it, easy for foreign, not easy, make it backwards to please foreigners. I served on the board of Motorola in the 1990s. And I remember the first year I served on the board was 1996. We had to ship back $500 million of US dollars. Not a question asked. As long as you do it right, it can be done. Well, why should things not change? Over time, they are going to, as the need for foreign capital and technology and so forth wanes a little, of course they will take back a little bit of the benefits that are granted previously to foreign companies. So, hey, you've been enjoying it for the last 20 years, 30 years, so just be happy with it.
Mm-hmm. Another question up here, just to the left.
My name is Ying Hostler. I manage Penn State University Endowment. My question is related to India. One thing has always puzzled me is every time I talk to an Indian manager, they always mention about the impact of monsoon. And I, as an investor, I will hate to be put at the mercy of God. So I wonder, what's the impact, what's the magnitude of correlation?
First of all, we are in California, just to be clear.
So
we have the same issue here. But it is, Dilhan, you can jump on this too. I mean, because India is so rural and agrarian population is very high at the base level, the monsoon does feed the nation, and it does feed a lot of employment, and it's critical to the cycles. And it's been that way for a couple of centuries. And they have been periods of, this year there was a concern the monsoon was a little bit late, but it's pretty consistent in terms, it's much more consistent if you analyze weather patterns relative to, say, California, where we've just had a greatest, wettest winter in history. But it is much more consistent. But it's, I think a more difficult question is what happens countries like Bangladesh with climate change, where the Himalayas are melting and the sea level is rising. I think it may be a bigger question. Do you have a thought on the monsoon or global warming? I know Singapore has an elaborate plan to lift the country up.
Well, I kind of add to what you said about the monsoon. I mean, I think it's the only country where people are praying for the monsoon. Because it is so important to the agricultural economy. It's so important to irrigation and arability of land. And so it's actually seen as a positive and not a negative. In other countries, a monsoon will be seen as a negative because you don't really want to be waterlogged in any particular form or fashion. I can't talk about Bangladesh and so on, but I think climate change issues are actually quite critical in lots of places, especially islands like Singapore, where we do have natural barriers to other forms of natural catastrophes like tsunamis and so on, but rising sea levels are a big concern for us. I mean, so far we're pretty all right. I think we'll be all right for the next 50, 60 years. But if you think about 100 years down the road, then you have to start thinking about what you do in terms of barriers. And we've created this thing called Marina Barrage, which is a huge dredging area to ensure that at the end of the day, we actually are able to raise, if we can over time, raise up our underlying bed. But that is that's 50, 60, 70 years down the road. It's not going to happen soon. It's not like the Maldives. But let me tell you about India. I mean, I think India, you can't have a better set of circumstances like you have today, okay? Because Prime Minister Modi has actually consolidated his position. As we saw from the elections in Uttar Pradesh, from the municipal elections in New Delhi, he's focusing on the right things. He needs the upper house, by the way, because without upper house, he has limitations to GST reform or land reform. But other than that, the discipline in the current account deficit at 3% of GDP, the total government debt, that's all coming in. And he's looking to take away typical bureaucratic, obstacles that have happened for years and for decades, which have held India back. He's really pushing digitization in the economy because it's a way of uplifting communities, but also to take away the influence of middlemen in actually, leaking out the benefits of society and to the rural populations in particular. So if you think about all these things, at least from a macro perspective, India is a positive for us. And we've deployed more capital in India in the last 3 or 4 years, and so far it's turned out to be all right. But funnily enough, our largest deployment of capital is actually the United States. Okay, it has been for the last 3 years and probably will be for the next few years. And that's simply this, right? The United States is still, the #1 country for innovation. And the innovation in the United States is not funded primarily only by government or by big corporations. There's huge amounts of private capital available to actually drive the innovation and to see an outcome for innovation. So that's this convergence of interest in innovation, confluence of different pockets of expertise and capital that come together. But we also see that China is rapidly moving up in that direction too, because China's R&D spend is 2.5% of GDP, which is higher than the US. The US is roughly about 2%. And private capital formation in China is also increasing to support R&D and innovation in China. So when we see, so we deploy a lot of capital in technology in the capital that we have for the United States. And as we see the models that are emerging in the US or have emerged in the US, we're seeing parallel models coming up in China much more quickly than we saw before and rapidly converging. And so in the areas of artificial intelligence, as much as you want to invest in Apple, Facebook, and Google and so on and where they are, you can't ignore the likes of Baidu, Tencent, and Alibaba in that area as well. And so, it's a very interesting dynamic because I think in 5, 10 years' time, you will see China emerging as not a copycat, but you will see them having their own innovative business models because the desire to really come up with the groundbreaking developments is very strong in China, very, very strong.
Maybe just I'll put the panelists on the spot here in the last few minutes here, starting with Ronnie again, and we'll go stage left to right. Maybe just quickly, as you look at Asia broadly, what you see as the greatest opportunity and the greatest risk, just very simply. You're next.
I stick to my gun. China consumption is going to be one of the best things. The biggest risk is that China has to not blow up socially. 5 years ago, I was very worried about it. I think today, under Xi Jinping, it's a lot better. But there's always weakness in the social structure that can give them headache and heartache. So, but some of those are almost like black swan events. Yeah. So it is difficult to project. And so I asked myself the question, and I said, China, if I worry about that black swan event and don't go into China, I may avoid the black swan, but on the other hand, or gray swan. But that said, it may not come for another 10, 20, 30 years. And I will miss tremendous amount of opportunities. So I can't afford not to be there.
And you think cooler heads prevail on trade?
Sorry?
You think cooler heads will prevail on trade?
Oh, yes. On China, it's always cool-headed, by the way, on trade. The United States, As I mentioned, Wilbur Ross said something last evening that is very assuring. He said, hey, we don't want to blow up the world. We don't want a trade war. We're not for that. We just want a fairer one, which is ridiculous, frankly. I mean, so I told him, I said, hey, all you need to do is sell LNG to China. Throw in a little bit of high tech if you like. And you solve the whole problem of trade with China. But you don't want to sell them what you have, which is commodity, like LNG. So who are you to blame? No, I shouldn't say that. A lot of the things that you hear in this country, sorry, it's totally baloney. You believe it without understanding what is really going on. Perhaps you don't deserve to succeed in this life.
I always felt, well, I actually felt that TPP was a gift to the U.S.
Yeah.
And they ripped it up. I mean, that bill was so perfect for U.S. interest and U.S. trade, and it was positioned completely the opposite. It was all about non-tariff barriers. It was behind-the-wall protection, IP protection, workers' rights, all the things that people wanted. And it was a great tragedy to see TPP removed, particularly with the amount of work that was required.
And no big deal. The world has been doing okay without it. So, of course, if you have it, it's better. But if it don't have it, hey, it's not the end of the world, so what the hell.
Tony, you're... I'm in the airline business. I know there's risks all the time with cycles, but...
No. I think, look, it's the same story. Consumption, technology, these are two opportunities. And I echo Dilhan. I think already there are many innovations in China and even India and ASEAN, which are ahead of the curve in the West. So I think those are the two big opportunities. The risk is geopolitics. It's beyond me. It's the first time I see military people in a presentation that I'm doing. It's kind of a new experience for me to see so many badges there. But, you know, I think pragmatism will rule, and all these hot-headed politicians will eventually change everything they see. And I, by the way, believe TPP will happen. I think it's too good. Mr. Trump has to appoint some assistant secretaries and some staff to do it. I think when he does, common sense will prevail. So I'm very bullish on the world.
My pick would be healthcare in Asia, which is going to run for decades and decades as an opportunity. And
True.
I actually do see the environment, the earlier question more on monsoons, as a meaningful risk to the social structure as well. Ryan, to your point, you know, when you go to Beijing now, the difference between the mid-90s, I think they'll figure it out, but the degradation is staggering, and the quality of life issue is meaningful. So all this wealth effect doesn't lead to a higher quality of life, but I think that'll become an issue. Dilhan?
I think much has been said. I think the biggest issue for us is geopolitics.
Yeah.
You know, what's happening in the
opportunity.
But yeah, I mean, you know, I think as Tony said, consumption, technology, it's all converging together, and that's where the great opportunity is. You know, for those countries that have been rather underdeveloped over decades, this is an opportunity for them to just escalate. You know? And I think that you know, if you look at where trade is and saw the numbers that you gave early on, you know, ASEAN is a big market. The U.S. needs to be in that market. And TPP was a way for the U.S. to remain connected with a rapidly growing market. China is a big partner with ASEAN. Right. That will increase if there's no TPP and there's RCEP. And we have an enhanced RCEP with better provisions in there. And with One Belt, One Road and the Silk Route initiatives, you're going to see much more connectivity. So, you know, the U.S. has been a long-time friend of ASEAN and, you know, or for that matter, Asia. It needs to continue to be connected because it benefits from it, and ASEAN countries and all the other countries in Asia benefit from it too. Yeah.
Two more down. Yeah. Toki-san, you are the closest to North Korea, so you know.
The first of all, opportunity is growing middle class. Yeah, obviously, with technology or IT or mobile or something.
And your risk?
Yeah, and negative side is geopolitical. But I think the education for the middle class. I think.
Last one for you,
same
Tony.
as above. Population, we have over half in residing or living in Asia. GDP is growing. As mentioned earlier, consumption is growing. All sectors, all kinds of businesses are needed for this population. And there is, as you mentioned, North Korea. and geopolitics, and then certain religious sector. Hopefully, our political leaders can manage all of this and have a peaceful society.
Thank you. Well, we appreciate everybody coming out so early, and Milken for hosting us today, and Laura from Milken Singapore, who's running a conference in the fall, which is Milken Asia, based in Singapore, right around the time of the Formula One. So thank you all for joining us today, and thank you to our panelists here, Ronnie,